but it doesn't have to be. Think of AI as a smart assistant for your investments. S1 Media, smart assistant for investing. Artificial intelligence, it sounds complicated, right?
It's like having a supercomputer crunching numbers and spotting trends.
AI uses algorithms, which are like recipes. These recipes tell computers how to learn from data and make decisions.
Just like you learn to ride a bike by practicing, AI learns to invest by analyzing mountains of information.
AI is changing the game in investing. It can analyze huge amounts of data much faster and more accurately than humans.
Imagine reading every news article, financial report, and social media post about a company. That's what AI can do instantly.
This helps AI identify patterns and predict how stocks might perform. It's like having a crystal ball, but powered by data.
AI can also automate tasks like rebalancing your portfolio, saving you time and effort.
There are many AI tools available to investors, even beginners.
Robo-advisors are a great example. They build and manage your portfolio automatically, based on your goals and risk tolerance.
Sentiment analysis tools are another interesting option. They analyze news and social media to gauge public opinion about a company or asset.
Some platforms even offer AI-powered stock screeners, helping you find investments that match your criteria.
These tools are designed to make investing easier and more accessible for everyone. Section 4. The power of prediction. How AI can give you an edge. One of the most significant benefits of AI in investing is its predictive power. By analyzing historical data and identifying trends, AI can forecast market movements with surprising accuracy. This can help you make more informed investment decisions, potentially leading to higher returns. However, it's important to remember that AI predictions are not guarantees. The market is unpredictable, and past performance is not indicative of future results.
Absolutely. While AI can provide valuable insights, investors should always be cautious and not rely solely on these predictions. It's about enhancing your strategy, not replacing your judgment.
Section 5. AI investing, not without its risks. While AI offers exciting possibilities for investors, it's not without risks. AI is only as good as the data it's trained on. If the data is biased or incomplete, the AI's decisions will be flawed.
It's crucial to use AI tools responsibly, understand their limitations, and diversify your investments to mitigate risk. Remember, AI should be a tool to enhance your investment strategy, not replace your own judgment and research. S2. Media, young student researching investment strategies on a laptop. And you know, AI models can be really complex and difficult to understand. This lack of transparency can make it challenging to trust the AI's recommendations.
Exactly. Balancing the power of AI with your own due diligence is key to successful investing.